Hello folks, welcome to Pro Trader Strategies Market Commentary for Friday, April the 23rd. I'm Eric Wilkinson, and you might very well recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environment, how those come in to impact the markets with some of my market analysis. I'm going to do the same thing in these daily market commentaries, but I'm going to go a little bit further and talk about option strategies I implement into my portfolio based on those assumptions I come up with in my market analysis. And for you folks, we've streamlined that process for you to find the best strategy for any given assumption. We don't just look at a bullish assumption and buy calls, because sometimes the pricing in the options is too expensive to buy. So we look at that and we determine if they're cheap or expensive, and that's really what is going to be the catalyst to determine our option strategy. So check out those guidelines that I've set out for you guys to follow along in those webinars, and you can check that out at protraderstrategies.com. All right, let's get on with the economic data. This is the day we've been waiting for, folks. It's been a quiet week until now. We got the flash manufacturing and services PMIs. Now keep in mind, these PMIs stands for Purchasing Managers Index. These guys are the ones that buy the raw goods that go into the company's manufacturing process, or the goods that go into the service sector, and then they're buying that based on what they foresee as future demand. So that's very important. It's forward looking with these guys, and that's why I like looking at this number rather than the ones that are in hindsight. But to start off, the hindsight one, we got retail sales coming in at 5.4%, expected to be 1.5%. So knocking it out of the park, and a slight revision to last month's number higher. But geez, that number, retail sales, just crushing it. So let's talk about the flash manufacturing PMI for the French sector. That comes in at 59.2, right in line with expectations. Now remember, anything above 50 expansion, anything below 50 is contraction. A lot of these economic data points, we've been seeing contraction across the board. So we want to see those numbers get above 50. That's going to start showing us that the economy is starting to move. So let's get on with it. Like I said, the French manufacturing, higher than expected. Remember, France, Germany, the two main manufacturing sectors of that European region. So the service sector for French coming in at 50.4, just slightly above that 50 high water mark, right? That's above water now. It was expected to be 46.6, and last month's number revised up to 48.2. Now, what's significant about this number? It's the first time we've really seen this number get above 50 during the pandemic. There was one other time, I would say it was probably back in July, I think it was, that we got a couple of these data points getting above 50. But for the most part, throughout the pandemic, since the pandemic started, almost back to the beginning of 2020, at the beginning of that pandemic, right? So getting above 50, pretty big deal. All right, and then we got the German flash manufacturing PMI, 66, higher than the expected 50 or 65. The service sector for Germany, the PMI coming in at 50.1, just slightly above there. Revision last month's number from 50.8 to 51.5, so a nice revision there. Across the broader European region, we got the manufacturing PMI coming in at 63.3, expected to be 62. The service sector PMI, 50.3, expected to be 49. Again, that number only one time back in July of 2020 was the only time we really saw that pop above 50. But for the better part of the last year, we have been below 50. So great to see that number getting back above as well. And then Great Britain's manufacturing PMI, 60.7, expected to be 59, and a revision higher last month's number. And the services PMI for the Great Britain, 60.1, expected to be 58.9. Here in the United States, we get our own flash manufacturing PMIs. It's good to look at. We really wait for our ISM PMIs for the United States, which is the Institute for Supply Management. But it's good to look at anyway. We got manufacturing PMI 60.6, in line with expectations there. Service sector PMI 63.1, expected to be 61.6. And finally, we got new home sales. How did those work out? 1,021,000 new home sales, expected to be 885,000, and a huge revision to last month's number, originally 775,000. revised up almost 75,000 at 800 and close to 50,000 homes sold, new homes, knocking it out of the park. We saw earlier this week, existing home sales kind of fell flat, a little bit lower than expected. I talked about higher prices. We saw the median home price rally up from 319 to I think 329 now. And so housing prices are going up. We've seen the interest rates go higher. That makes it difficult for people to buy the same type of house that they were originally considering. And we're seeing lumber, copper, all the prices, all the inputs into a home, those prices are going higher, causing housing prices to go higher as well. Anyway, good to see new home sales knocking it out of the park, probably making up a lot of that dead weight that we saw over there in the existing home sales. So let's talk about the equities in the markets. We've got crude oil above water right now, back into 62 handle, above this 78 Fibonacci we've got lined up here. And yesterday, it just finished above the 50-day simple moving average, which just probably gave the bulls some momentum to the upside here, at least for today. And then we got the bonds coming off by 11 ticks, but above its 50-day simple moving average here. So that is, still in a bullish move here. Lower interest rates will help these home prices as the bonds move higher. Remember, interest rates go down if we can get that to happen. Bitcoin yesterday, just a massive slide as we're just seeing a lot of news come out that, there's people downgrading this quite dramatically across the board. And then we've got gold futures. They're off by about $10, but for the most part, it looks like that whole 1800 is out of the realm of possibility at this point anyway. VIX coming off as we're seeing the equities rise. We've got the NASDAQ up 117 points yesterday. It looked like it was going to be a quiet day, and the market just continued to capitulate throughout the day. It felt like it just was one down tick after another. Today we're starting to get that move to the upside, something that's going to be impacting the markets going forward here in 2021, and that's something I've mentioned. I think that we aren't going to really continue to see massive highs in this parabolic move that we've been seeing here in the equities. I think that we're going to see more volatility in a sense, but a sideways trend, some corrections in there. We could really bump this with what the Democrats and Biden are talking about with capital gains tax, going from 20% to 40%, doubling that capital gains tax. What's that going to do right now, folks? That you're going to have to really be on your toes, I think, if this starts going through, they start raising the taxes and things like that, because who owns the majority of these equities? Probably the people that have been accumulating or are wealthy, above $1 million a year kind of thing. So those are the people that are going to be impacted by this capital gains tax. Now, if they start dumping, right, because they're going to save 50% in taxes, they could cause this overall market to slam down. Now, you've heard me also talk about the market can hurt the most amount of people as often as it can. Well, if we start seeing a situation like this where the big money dumps, this market capitulates. Another thing we've seen, the most investment in the equities in the last 50 years. That means that the median age of the investor has gone down a little bit because we have a lot of millennials, a lot of newer investors coming into the market. Now, we start seeing this type of correction based on this capital gains move. Keep in mind, these newer investors will hold a lot longer. They seem to have a higher risk appetite. They aren't going to be as quick to get out of some of these stocks, I think. So we start seeing this massive sell-off. Those folks start getting into the selling spree. We could really see a massive correction in this overall market. So I'm not trying to paint a doom and gloom here, but it is something we are going to be hyper-focused on going forward here, making sure that our portfolios, or at least I'm going to be making sure that my portfolio has protection to the downside. And I don't always do that, but it's going to be at the front of my brain, trying to make sure that I am always hedged here going forward. All right. And we can see here yesterday, right after, when was the daily market commentary sent out? Right about here, and boom, the rug just got pulled out. overnight, pretty flat though, and coming into today, it's very strong. Based on that economic data, I wouldn't expect any less of this market to start moving to the upside. And finally, the last trade that I did, if you guys remember, 22nd Century, I was in this trade for quite a while, got in for about $2.50. I got out yesterday for $4.06. Obviously, today, a move to the upside. It could have gotten out a lot better. But this broader sector has really been struggling, so I just decided to get out of all of those stocks that I've accumulated over the last year. Part of that has to do with this capital gains tax. I'm a little bit worried about some of those corrections happening, so just trying to stay diligent and ahead of that as well. But covered this, haven't added anything at this point. Other than I am looking to sell some puts in some of these stocks that I've gotten out of to try and do some dollar cost averaging, get in at cash secured put level that is good strike location. So all of those things I'm going to be looking at going forward today. That's all I got for you guys, other than take a moment to go over our disclaimer, as we're an educational company. Check out those webinars that I'm doing right now. We're setting it up, or we're finding option strategies based on swing setups. So check that out. You get a kind of double bang for your buck. You get the option strategy and the swing setup. And then finally, smash that like button for me if you would, because it does really help. Gives me good feedback. I know what you guys are enjoying. And finally, if you see a market out there that you want me to cover with my technical analysis, comment down there at the bottom. I'd be happy to go over, add that into the repertoire that we're looking at here. So please reach out to us, and I want to make sure everybody's clear of concept too. So if you have any questions, throw them down there too. All right, so if you can't take that, take it easy. Have a great weekend.